Monopoly by Grit.
Welcome to Monopoly, Season 3, Episode 3. Today we are going to talk about the history of property investment. And we have a special guest today. He is Paul Millson, one of the founding directors of Orbit Homes, who has been in the business for the past 45 years. It's a pleasure to have you on board, Paul. It's been a long time waiting. It was very hard to catch you, but I'm glad we finally met because not everyone can talk about the history of property investment. We have been in the business for about 10 years, but Paul has been there for the past 45, 50 years, and that's a long time. And this is a golden session. Please do not miss this out. Let's go. Thank you, Paul. Thanks for joining me. Before we get to it, have you played Monopoly as a kid?
As a kid, absolutely.
What were your learnings and what were the hacks you did while you were playing?
Oh, right. Building properties, of course. You wanted to get hotels, houses, offices, the whole lot. It was, many argument, I'm sure, like everyone else.
Yes.
And you throw the properties around, but
as I said, that was the motive behind this podcast, and that's how we started.
That's smart. Very good.
All right, so let's get into it. Not many people can talk about the history of property investment, but I think you have wealth of experience. I think this is going to be very useful for myself, for my knowledge, as well as for the audience. Back in 1980s, why did you get into the construction business, and how did it all start?
It was a family. The family was in the building industry.
Right.
So our father and uncle had a timber and hardware store.
Oh, okay.
So we spent the younger years working there, and so we're around building. Then they started doing some building as well.
Right.
So we worked on some of their projects. So we finished school, did our apprenticeship, and then we started 1979, our own building company.
Beautiful.
So it was only small at the start, of course. We started off doing pergolas and stuff like that for friends and family, and then it just progressed through the 80s.
Right.
We were carpenters by trade, yeah.
All right, excellent. 1980s, do you think there was a concept of property investment, or was it more of buying your dream home in Australia?
Predominantly trying to buy your own home. That was the main focus. It was some investment. We didn't see much of it.
Yeah.
We did some spec homes for clients.
Yeah.
We basically sold them off. They didn't keep them. But in those days, I think people were more likely to go and buy a flat as an investment property.
Right.
And then it sort of like came to the fore, mid-80s, I think it was, where they cancelled the negative gearing.
Right.
And I think that brought it to the fore.
Okay.
And people thought, what's negative gearing? What's all this caper? But then 2 years later, I think they brought it back.
Right.
Until we have it this day. And so the 80s, certainly for us, we didn't see a lot of investment.
Right.
It wasn't until the mid-90s that we started building investment homes for people.
What was the first construction cost of your first project as a house?
Oh, geez. I think you can get a house and land for about $150,000.
Oh, my God.
So even less. It was crazy. We've still got some of the advertising clips that we did.
Whereabout was it? Whereabout in?
This was predominantly in the northern area.
Right, okay.
So through Meadow Heights, Roxburgh Park.
Right, okay.
Greenvale, we started in Greenvale.
Okay.
And then Mill Park, so predominantly in the northern suburbs. Yeah.
Right, okay. That's very interesting. And then you were talking about flats as investment. So did they used to call apartments as flats back in the day?
Yeah, or block of units or flats.
Okay.
Yeah.
And how much was one of those?
They were cheap, $100,000 or something. You could get a flat. And, yeah. But, I think you mentioned the 80s were fairly turbulent.
Right.
Interest rates were climbing.
Yeah.
I think 13% was probably...
Was it the late 80s? And
that was later 80s, yeah.
Yeah.
And then obviously it skyrocketed up to 17%. And
that's in 1993?
Yeah, through those recession eras. Yeah. But so that was difficult for any business, not just ours. But and to get a loan, let alone a housing loan, then trying to get an investment loan.
Yeah.
On top of that, it was,
Yeah, 17% was probably the all-time high.
Oh, absolutely. It hasn't been near that. Yeah.
So what shifted in 1990s?
Well, we had the recession, probably had two recessions. So whether you call it recession or correction.
Right.
And then that was, I think Paul Keating said the recession we had to have.
Right.
I think that was 93.
Right.
Then 95 came out of that and things started to get pretty good. It was a good period.
And then people's mindset, they went into a bit of investments in the late 90s, you think?
Yeah, I think that was more driven by, from a tax perspective. People just used to do their own tax return.
Yeah.
And then accountants started to become more involved, and they had tax specialists.
Right.
And they often would obviously recommend you get an investment property.
Right.
And so you could negative gear it, and if you could hold it, the capital gains was pretty good.
Right, okay.
Well, property has gone up historically.
So, and as a business, you would have started getting investment property deals along with the home buyers.
Yeah. We weren't selling them ourselves, a bit like your company. There was who would offer a financial package,
right?
The accounting and the advice, and I think that came to the fore mid-90s, and I think now it's bigger than ever. It feels like it.
We are going back in time. So what happened in 2000 to 2010? That decade, what changed? I'm sure that would be a significant change.
That was pretty solid. It was all upside.
Yeah.
Then there was the crash in 2008.
Yeah.
Which obviously hurt a lot of people.
Yeah.
So it goes in flows. You can see you probably normally get a 5 to 7 year period.
Yeah.
That is very upside and proactive.
Yeah.
And then for some reason it hits the wall. So.
Yeah. So from people point of view as well as investment side of things, do you think for the past 30, 40 years people have evolved, or along with the technology and everything else, there's more option?
Yeah, there's more options. People have evolved.
Yeah.
And like I said, those accounting firms and so forth come to the fore.
Yeah.
And I just think people are encouraged to minimise their tax more so.
Yeah. And people got more educated as they went along.
Educated, yeah. In those days, there was no internet or anything like that, so they had to rely on word of mouth and advertising.
Yeah.
But now you can jump on the internet and get all the advice you need. And with AI, who knows where that's going to
exactly.
end. So it's we're trying to adapt to that as well.
Yeah.
Because you have to play in that space otherwise.
Yeah. No, of course.
Yeah.
And as an investor right now, people have investment properties. You get, again, townhouses, house and land, completed ones. Then you get the property development projects. You get NDIS. There's so many options.
So many options now. So, I don't know what percentage of people have an investment property.
Yeah.
But I'd imagine it'd be significant.
Yeah. Now, according to the stats, I think if you look at about 1.3 million people get started on property, meaning to buy a property, whole of Australia. But if you look at people who have 3 or more properties, it's only 1%. So it's that's
very small.
Yeah, that's very small.
Because I think they say the benefit is you should buy another one every 5 years.
Yeah.
So, and I don't know, you've got to decide how long you hold it, but like property prices go up over a 10-year period. They increase significantly, don't they?
Yeah.
So you're sitting on a lot of equity.
And that sort of stories were accountants or financial planners advising clients back in 2000?
Yes, they certainly started to come to the fore.
Yeah.
During that period.
All right, okay. And then when did the SMSF concept come into play?
Yeah, well, that was probably 2000s as well. There wasn't much around.
Yeah.
I don't know when the super funds commenced. The compulsory super. Was that 90s, I think?
No idea.
Yeah, I think it was in the 90s that super came in.
Right.
And then obviously it progressed into self-managed super funds through that 2000 period,
So that's another option right now.
Right now, yeah. Self-managed. There is compliance issues. You've got to.
Yeah.
Everything's got to be done well.
Yeah.
So
historically, what sort of trends have you been seeing? One is interest rates going up to 17%, coming down. Anything else which you saw in people or any other trends?
Yeah. There's been unemployment issues, which obviously affects people's decisions. And when unemployment 8% or something, it's not good. So,
when was that?
That was probably through that 90s period.
Right, okay.
Unemployment got up there. So, so there's all those factors that especially for buying an investment property, you've got to be secure.
Yeah.
Good employment and a bit of equity behind you.
That's right.
And, so if prices, like we just had this price escalation coming out of COVID, and that's obviously put a lot of people out of the marketplace.
Yeah. And back in the 80s, I'm sure the borrowing would have been very easy, right?
Oh, not so easy. There was
Really?
the main 4 lenders, and that was pretty much it. So it wasn't like today where you got the choice of,
Right.
there's that many, a lot of lenders out there. So
Yeah.
so then you had to, the banks had their criteria as they do now, but it was pretty tight, yeah.
Right, okay. I mean, $100,000 back in the day would be about $1 million now.
That's right, yeah. It's all relative, isn't it?
Yeah.
Yeah, so I don't think much changed in the banking industry other than choice.
Yeah,
I still think they have the similar criteria.
yeah, okay. And right now we have the internet too, as we discussed before, to check the statistics, data, what are the trends, all that, but which was never the case.
It wasn't the case, no. It was basically all...
Was it the gut?
No,
decisions,
a lot of it was all press,
Yeah.
like all the advertising. The local papers were
Yeah.
huge, and also the Herald Sun had a property lift out.
Yeah,
So that was probably our main vehicle to,
Right.
to get the message across.
yeah.
But yeah, not like today, no.
But yeah, that's advertising as well as media. But then for people to get educated on, was it?
It was difficult. They had to go to an accountant.
Yeah, yeah,
Like even there wasn't much around in those days, financial planners either. It was-
yeah. So people would have been following media and wherever
And word of mouth. I
Word of
think.
mouth, yeah.
Yeah,
yeah.
no doubt.
Interesting.
Hmm.
I mean, with the right education, now people are very well educated. They know where exactly to buy, what the stats are.
Yeah, they can get returns.
That's right.
Everything's available, which is
Yeah.
it's fantastic
Yeah.
for a buyer.
When did REA come into play?
I'd imagine that would have been
19th?
No, I think it was more 2000s.
Right, okay.
period, yeah. As the
So there was no
started.
portal; it was just newspaper advertising.
No, just newspaper advertising. It was fairly straightforward, and that was we used to call it
Leaflets as well.
leaflets. You do mail drops,
Yeah.
all that business,
Yeah,
and word of mouth was very strong.
yeah.
So, yeah,
Interesting times.
it was good.
Were there any regulatory changes in the 80s or 90s which had an impact on?
I wouldn't say it had a huge impact. Obviously, there's always regulations
Yeah.
changing, but no, there wouldn't be anything that's significant that affected
Yeah.
the market.
Right. Okay. And when there was a recession and second recession, as we discussed in 1990s, what was people's reaction to it? Were people struggling, or was
Oh, yeah, a lot of people were struggling. It was very difficult. Unemployment obviously skyrocketed.
Yeah.
And it was probably the economy was going backwards.
And as a business, how did you?
Yeah, it was difficult.
go
There's
through-
still buyers there, of course. So you just had to position yourself, and that's where obviously marketing, advertising, and
Yeah.
all that came to the fore.
Right.
Yeah, and you had to do a good job. That word of mouth was very strong.
How was the competition among the builders? Were there many build at the
Oh,
time?
not as many as there is today, but there was still, there's probably 5 major builders and a lot of
Right.
smaller builders.
Right.
AV Jennings and the like of those were big, and then Henley started in the 80s as well. And so no, there's a lot of builders now.
Yeah.
That gives people more choice, and
Yeah. So back in the day, everyone was advertising on the paper, mail drops.
everyone was doing that. Yes. Sounds primitive now when you think about it, but
But would have been expensive exercise.
yeah, it was pretty expensive. Yes.
What about billboards? Were there any billboards?
No billboards. No. You can have your on-site signage, which always
Yeah.
helps, but no, it's amazing what it was like and
Right.
what compared to today. Yeah.
I saw. I reminded of a billboard. I saw Orbit billboard
Yeah,
on
we've
the
got-
Citylink.
We've got the billboards up now, yeah. Oh, it's a good form of just getting the message out. It's
Yeah.
more of a marketing exercise.
And also branding.
A branding. Yeah.
We are here.
We're here. That's it. And so, it's an easy form to get your message out there, just to be known,
Yeah. Any other lessons which we can learn from the history as property investors where you can adapt right now?
Yeah, I don't think it's really changed that much.
Yeah.
Because I think obviously you got to be financially capable.
Yeah.
To get into that investment marketplace, but once you're in, I think you don't get out.
That's
I
right.
think it's something you stay in.
That's right.
There's benefits, not only the negative gearing, there's the growth in the price of the property.
That's right.
So you're building wealth.
Yeah.
And
In terms of the construction, has anything changed in terms of material or the methodologies?
yeah, when we first started, it was all what they call stick build.
Right.
So, you'd get your timber, you'd have to cut it, put it together.
Right.
And that when we started, there was no nail guns and
Wow.
it was all done by hand. We had electric saws. And, so now it's where we are now, it's all prefab. So the walls get delivered, you stand them up, then you get the truss roof, put it up. So it's much more efficient and effective.
So when did that all start? The prefab
That started probably in the 2000s a little bit,
Right,
but it's really the last 10 years, 15 years, it's come to the fore.
Right. And I heard now they're testing out robotics.
Robotics,
In the construction industry too.
Yeah. Well, they've got one that can lay bricks, but
Oh, really?
yeah. They use that on the big factory projects.
Okay, right.
But now you got block wall, and I don't know. One day we might get to stand-up walls where it's delivered with an external finish already
Right.
on the product.
So what was the build time frame back in the 80s?
It was a bit longer, only because of the more manual labour, but it wasn't that much difference. No.
12 months or less?
Less. Yeah. Now it averages about 8 months.
Yeah.
So probably about the same, not too bad.
But in terms of the house sizes would have been smaller.
They would have been a bit smaller, mostly 3 bedrooms,
Yeah.
1 living area,
Right. 1 bathroom.
1 bathroom, no al fresco. And that's where the design's changed, and like the kitchen was a separate kitchen area.
And average size would have been about 15 squares?
About 15 squares, yeah.
Yeah, okay.
And they were probably all on stumps. We didn't do slabs,
Right.
concrete slabs. They came in the 90s.
Right. Okay.
So it has evolved, and it's pretty good building methods now.
Yeah.
And that's the next step, what happens with that prefab side of things with a finished external wall product.
So when the property is on stumps, was there structural issues at all? Or was it pretty solid at the time?
Yeah, there wasn't concrete slabs at the time. It was very solid.
Okay. Right. I mean, you could still get houses on stumps.
Not many build them now, though.
Yeah, not building, but old ones. Yeah.
Old ones, yeah, absolutely, yeah. So they've stood the test of time.
Yeah.
They're still standing.
Still standing, that's right.
Yeah, so, it has developed significantly.
Yeah. Finally, what are the lessons you can give to an investor with all the wealth of knowledge you might have?
Yeah, I think the biggest thing is for themselves is to get all the knowledge that they can.
Yeah.
Get all the information.
Yeah.
Because it's their decision in the end. They don't want to have buyer remorse down the track. And all the information's available. And when they look into it, they'll see the benefits are really strong.
And as you said, the money is in the long term.
Oh, that's right. Yeah.
So you got to hold the property as long as
if you can
you
hold for 5 to 7 years, that's when you're going to get the real benefit.
That's right.
You can see prices, how much they've increased from decade to decade. And even the last 10 years,
Did you guys invest back in 80s and still holding on to it?
No, we didn't, unfortunately. I suppose that's one of the downsides of our industry and our job is that if you did build something, you sell. We build and sell.
Yeah.
But in hindsight, you thought, wow, could have held.
Would have kept a few.
Could have kept 10 or 20 of these, but that's the business, is that you just keep building and keep from project to project, and that's our model, I guess.
All right. Yeah. All right. Thank you so much, Paul.
Fantastic.
Wealth of knowledge. There you go, Paul Millson from Orbit Homes. He's a dinosaur in the industry. I hope you enjoyed this session. You cannot get this sort of knowledge, especially on the history of property investment, from anywhere else. Hope you enjoyed the show.